Let's dig deeper into Target's big drop today. Courtney Reagan is here with more details. Courtney, where do we begin?
Yeah, okay, so this quarter came up much worse than expected, following the prior quarter report, which was better than expected. So really inconsistent performance here. Target executive explained to reporters it missed earnings expectations by a wide margin because of two reasons. Sales of more discretionary goods, like clothing, were softer than expected, combined with higher costs to reroute and rush inventory to navigate the port strike, which ended up to only be a couple days. Now, COO Michael Fidelki explained to reporters, quote, "It meant we were fuller a little bit earlier in the quarter than we would like to be, and we're never quite as efficient when our buildings are full, but we felt like it was the right decision." Now, comparable store sales were marginally positive, with negative store sales, but then nearly 11% growth online. Contrast that with Walmart, to Kelly's earlier point, which saw much stronger than expected comparable sales in the quarter. Interestingly, Walmart said general merchandise sales did grow in the quarter for that retailer for the second quarter in a row, while Target struggled in that category, and the majority of Target sales are in those categories, while 60% of Walmart sales are food, to be fair, and only about a fifth of Target sales are. And those were positive for Target, but again, smaller part of the business. Still, many analysts think the issues are Target-specific, not a reflection of the U.S. consumer. Target executives said consumers are spending, but being choiceful, a lot of executives using that word, pointing to a quieter sales week before October's Circle Week, when it being Target, saw sales hit a record. So saying customers are buying, but they're waiting for key moments. They're watching the prices. And when we drop those prices, then we see them buy.
Walk me through the inventory issue again.
So what Target was trying to do was, when there was rumblings that there was going to be this port strike.
Long port strike.
The long port strike.
They loaded
exactly.
up.
They loaded up, right? So they paid to reroute merchandise, which cost more because then it went to different destinations than originally planned. They paid to hurry it up, rush it, maybe bring it in on planes or do something with boats that were faster. So that cost more. Then they had more inventory. And the more times you have to touch inventory in the system, whether it's a distribution center, back in the back office, in the aisles, it costs them more money. So they had more goods that they paid more to get, and then those goods that they had didn't really sell very well. There was just softer demand for customers buying those discretionary categories, and those are categories that Target over-indexes in compared to Walmart. And Walmart did say they did better with general merchandise this quarter. The percentage of their sales there are just smaller than Target's.
And so now, in the most recent quarter, they had a lot of things that they had brought in that weren't selling quite as well.
Exactly. And Target executives are trying to say, look, we think things are going to get better. There was a lot of quarter-specific issues here, but they had to take down their guidance pretty substantially. Guidance, by the way, that they just raised this last quarter. So analysts are kind of shaking their heads saying, what's going on here, guys? Do you have your stuff together or do you not? Just this inconsistent performance quarter to quarter.
And I'm also a little surprised that it was such a surprise. So whenever that was last summer, the one before when they had all those issues with the woke inventory mix, that was well publicized. It was a huge talking point. Everyone knew about it and had an opinion. This time around, why weren't the analysts, were there channel checks to be done to pick up on soft traffic or the wrong product mix, or was there a seasonal, was it too, why was it such a surprise?
So that's a good question. And some of it, Kelly, could have been, quite frankly, just inventory we couldn't see, meaning it wasn't on the shelves, right? It was in a storeroom, or it was in a distribution center because they hurried it up to get it to the shore, but they weren't necessarily stuffing the shelves, if that makes any sense. So that could have been part of it. But I agree. You would think perhaps some of the company might have started to signal to investors, to Wall Street, to analysts that things were not quite looking as rosy as those forecasts, because clearly their miss was wide and they're paying for it in their share price, now hitting 52-week lows here today.
Wow.
All right. Court, thanks very much.
Thank you.
Courtney Reagan.